Welcome back to Sora Trade Alerts. Today is Monday, May 13th, 2024, and today we're looking at the Tesla stock chart, and I wanted to start off with the monthly chart of Tesla, and we'll work our way down. The sentiment surrounding Tesla stock is currently deeply bearish, and this perspective is supported by significant trends in the stock's performance, since reaching an all-time high in November 2021 of 424.50. The stock has seen a substantial decline of 60%. However, it's important to contextualize this downturn. Despite the recent drop, Tesla stock has achieved an extraordinary growth of 21,000% since the initial public offering, underscoring a remarkable historical ascent. Such a robust increase typically anticipates some level of correction or consolidation, which we are observing now. Furthermore, a technical analysis of the stock's movement on a daily time frame reveals the formation of a large symmetrical triangle. Notably, last month's trading concluded with the emergence of a hammer candlestick, a pattern often interpreted as a potential bullish reverse signal. This suggests that while the current sentiment is bearish, there could be foundational support for a positive shift in the stock's trajectory in upcoming sessions. Whenever a stock exhibits a hammer candlestick formation at or near the base of a downward trend, it is generally expected that the following candlestick will retrace between 1/3 to 2/3 of the previous downward move. Currently, Tesla stock has managed to retrace to the 50% Fibonacci level. Although the price is slightly below this exact level, marked at 169, with the closing price at 168.47, there are indications of potential upward movement. Should the stock successfully surpass the 171 mark, this would considerably enhance the likelihood of a reversal. Looking forward, if this upward trajectory is able to reclaim and sustain above 175, the immediate targets to watch would be around the 185 and 198 price points. Beyond these levels, the next significant resistance could be the declining 20-period moving average, which is currently positioned at 207.18. Successfully reaching and surpassing these targets could affirm the stock's recovery from its recent lows, signaling a more robust bullish momentum in the short term. Should Tesla's stock price continue its downward trajectory, the next critical target on the downside is positioned at 153.68, corresponding to the 23.6% Fibonacci retracement level. If the decline extends beyond this point, the subsequent level of support is anticipated around 140. A closure below this threshold would signify a breakdown from the symmetrical triangle pattern on the downside, potentially triggering more pronounced bearish implications. Given the gravity of such a move, further speculation on outcomes beyond this scenario is premature at this juncture. The trading strategy proposed involves purchasing July or August 160 puts if Tesla stock fails to reclaim the 171 mark. This approach is predicated on the potential downside target of 160. Should the stock price breach this level, it significantly heightens the likelihood of reaching the next support at 153. Furthermore, a decisive break and close below 153 would reintroduce the possibility of the stock descending to the 140 level. This plan hinges on critical price movements and should be managed with careful monitoring of the specified thresholds. On the upside, if Tesla stock successfully reclaims and closes above the 172 level, this would substantially increase the probability of the price testing the 175 level. Additionally, a close above 185 would refocus attention on the 198 level as the next significant target. In this scenario, the recommended trading strategy would involve purchasing 185 calls, contingent on the stock closing above 172. These calls should have expiration dates set for either July or August to provide adequate time for the anticipated movement to unfold. This approach leverages strategic price levels to optimize potential gains from upward price movements. Examining the weekly chart, it's evident that Tesla stock has been consistently restrained by the declining 20-period moving average. This technical barrier has largely capped upward movements. Despite this, Tesla stock managed to close an open gap that originated from a surge of news out of China a few weeks prior, suggesting a potential for rebound amid the prevailing negative market sentiment. As traders, maintaining openness to a potential shift in trend is crucial. However, current technical indicators do not yet suggest an imminent bullish reversal. The Relative Strength Index, RSI, remains below the 50 mark, and the 20-period moving average continues its downward trajectory, signaling ongoing bearish momentum. Given these conditions, my trading strategy would lean towards bearish positions, anticipating further declines until there are clear technical signs of a shift in the stock's behavior or change of character. On the daily chart, Tesla stock shows a slight upward adjustment as the 20-period moving average begins to curl upwards, with the price currently trading above this average. Despite this modestly positive sign, there is a concerning factor. The stock has relinquished all the gains it acquired following the China full self-driving FSD news from over 2 weeks ago. This pullback underscores the challenges facing bullish traders. For a robust bullish reversal to be considered viable, it is crucial for the stock to surpass and sustain above the declining 50-period moving average, which stands at 171.83. This level is pivotal as closing above 172 could significantly bolster the chance of a sustained upward movement. This closure above 172 would serve as a critical indicator for traders, signaling potential for a more pronounced recovery in Tesla's stock price. If you learned anything from this video and if you think we've earned it, please leave a thumbs up and subscribe and share this video with a friend. I hope you have an amazing evening and we'll see you on the other side.